This is Scott from Scott Pulsini Trader, and this is the section of the double whammy. Please take a second to read this disclaimer. So the double whammy is a strong fade type of event where the retail traders puke positions into the waiting hands of opposing icebergs. The tendency of stop runs of not usually being initiative positions, but instead capitulation of positions, coupled with the big money trading opposite of the puke, leads to a high percentage of reversals out of the area. Over the larger sample size, the setup has a high propensity of failing in the direction of the iceberg, 70+% of the time. So these are from my studies. You can watch it, you replay a book map and do your own percentages, but this is from my personal experience of watching these things. They have a very, very high percentage of reversing for the reasons I describe here, and we'll get into that in these examples. So this is gold. And we have here, you can see here as this market moved up, 197 stop runs into the waiting hands of sell ice, and this market bounced around here and failed out. So these setups, kind of just like the broken ice, they have less odds of coming back to the event. And I don't know the exact reason why. I just know they don't come back as much. I mean, it makes sense. Again, like I talked about in the opening frames, was about this. These are not stop runs, are for the most part not initiating positions. Yes, you could initiate into a stop run, but most of the time it's just areas where retail traders are peeking out of positions. Well, the first thing you know is that's not real buying, meaning initiative buying, where it's very unlikely to continue on unless it turns into a stop and hold event where the big money comes behind it, right? Well, this is basically telling you the big money is not coming behind that setup. The big money is fading those stop runs, right? So you have the dumb money, the retail trader puke into the smart money, the bigger money, that's what makes them smart, waiting hands, right? So those have a much higher propensity of fading and a lot of times not retesting. So you have to make the judgment call on these. We talked about this basically in every setup where, one, are you getting in right when it breaks through the zone? That's the ultra aggressive trade, right? That's doable. I don't trade that way. I wait for the full ATR, but this is still an aggressive trade where you break when you wait for the full ATR and get in that trade versus waiting for the retest fail or retest confirm is what we've now named it in my trade room. That's a little more conservative, and those work better, but you may not get the retest and then you miss the whopper move. So that's something as a trader you have to decide on your own, right? Are you one of those traders, I've talked about this every setup so far, that want to get in right when it breaks the zone and put your stop above the zone and cut your risk down a little bit? That's fine, but you are opening yourself up to that kind of trade around the zone, which happens quite often. Or you could follow my advice, and this is in the ATR section, where you get in outside of an ATR and risk an ATR above the event, and then you're risking more, but you just cut down your size. That's for you to decide. But the bottom line is this is a very powerful event that, if you understand how to trade it, could be very profitable. Next example. This is soybeans. So I don't have the labels on here, but this was an event. This was threshold. These were close to 500 here, and there are a couple of them. That's what makes this look small, but I think these two were combined. Was definitely over 200, and these all were over 200. So that's this event here. Obviously different colors there because I'm colorblind, but you get the picture. So you had the sell stop runs into the waiting hands of buy ice, and another one that didn't retest the zone just took off. And this is it's almost a 15-cent trade and counting. I didn't finish the day, but that's a huge trade, right? So once again, you got to decide, hey, here's the event. Am I getting in the minute this breaks above the zone? Actually, I would have been right here, and I risked just below it, or am I going to wait for the ATR and then get in? So again, I wait for ATRs and then put my stops ATR below. But again, I say it all the time. This is the science. The art is how you trade these. So 3 different ways you can trade them: aggressive, ultra aggressive, aggressive, or retest confirm. This one took off, like I said. Next example is gold, same type of look. 380 stop runs, the thresholds in gold's 500, or I'm sorry, 150, 163 buy ice. That's that zone there. Once again, do you get in? I have the bubbles kind of turned off on this one. Now let me draw the zone when I did the screenshot of this, but do you get in right when it breaks back above there, right below for the ultra aggressive, or do you get in ATR and then ride this up, or do you wait for a retest? Once again, if you waited for a retest, you don't get it and you miss the move, so you have to decide. But either way, a very powerful setup once again. And then the next setup is, this is more of a delayed, we'll get into a couple of these coming up. This is a delayed double whammy where you did have the pukes. And then it started to move down. They tried to buy it again. You can see that blue bubble, and it ran into a mouthful of sell ice. This is quite a bit for natural gas. 150 threshold for natural gas, so this is almost 4 times the threshold. So this is a delayed double whammy, but the same type of thinking. It wasn't directly into the hands of the sell ice, but you had the puke, which isn't usually real buying, the buy stops. And then they tried to buy it here with market orders and ran into the iceberg. So this is a delayed double whammy. Once again, no retest before it ran away. And then this is gold again. So this one, I don't think this was an ATR here. So this one you didn't get a chance for a retest either. Like I said, when you see these double whammies, you may want to be more aggressive in the trade where you're not waiting for a retest. But you had 182, you had another 254, and you had 187 sell stops, right? So there was a little bias coming in before that, some sell stops, more buy ice, and this is another cue where you can just say, you know what, I'm getting in the minute this breaks from the zone. You can see these buy sweeps in here as well. We go over sweeps in another section, but this is called confluence, right? So you have your awesome setup, and then you have market buying, market sweeps. You have market buying, the bubbles show you the market buying or selling, but then you have sweeps. So somebody's sweeping this order book, right? In between there was some stops, but it even showed up as buy sweeps because someone like said, okay, yeah, you're going to sweep it to the downside, I'm going to buy it right back, or you're going to stop down on the downside, I'm going to buy them right back. So you see all these buy sweeps. The minute it gets out of there, you can buy it, risk right below, ultra aggressive, wait for the ATR, gone. No retest. Another incredible trade here. This is 70, 60, 70 ticks and counting. And then this is crude. Same thing. Market comes down, actually sweeping it. You had 148. This is part of those stop runs there. You had that, and then 225 buy ice, and then another 542 buy ice, and then you can see the sweep starting to come in. This could be a signal for you to get in right away, like we've talked about many times. You can see what is this market telling you, right? You know that's not real selling. This guy's puking. You know the big one, he's buying hidden orders with their hidden orders. Then you see sweep. That's telling you that is a very, very good likelihood of ripping higher, right? So this is, once again, it's called confluence. So you're getting a lot of different signals that this market is going to rip higher. You don't necessarily have to wait for the retest. You can be, and in this case, like, you know, you saw these sweeps here, you could have been in right when that broke above that zone, and risk below there, you never got stopped out, right? Here it did move below the zone, but it never got above the first time, so you wouldn't even have been in, and there I probably would have gotten in. This is the ultra aggressive. Again, I don't trade this way anymore very often. I wait for the ATR, but even if you waited for the ATR, I mean, the ATR was probably the sweet spot for ATR for crude's around 20 to 25, so that means you'd be in, you know, basically right around here. If you waited for an ATR just outside of an ATR move, that's still an incredible trade, right? This thing moved 130 plus ticks from that entry, right? So once again, incredible setup, the old double whammy. So this one is another example of a delayed double whammy a little bit. So here you had buy stops. This is ES. You had buy stops 595. That's threshold. Threshold's 500. And then right after that, so they tried to, these first sweeps were the stops. And then they tried to sweep up again. A mouthful of sell ice. The market did move below. So again, ultra aggressive, you would have been in right there. Put your stop there. You never stopped out of this one either. This one did retest, fail. Actually, it came back a couple times. I don't know if that was the exact retest price, but this one definitely, this was definitely an ATR. Unless the ATR was, you know, out of control here. This moved down about close to 8 to 10 points and then retested. So this one, you could have been more conservative to wait for your area, or wait for your entry, I should say. But, you know, you're rolling the dice. you get this kind of setup and you're waiting for a retest, you may just miss it, like we've seen in the last 7 examples that I've shown. And then this is another delayed double whammy. This one was a little further apart. This is probably about 10 minutes apart. So you did have the sell stops there, and then there's this cue right there, or a clue that, you know, once again, that's not real selling. Then you see some sweeps. You're like, okay, I'm ready to potentially trade this. And then they try to sell at market orders or run out in a mouthful of buy ice. This is NASDAQ, by the way. And then off to the races, this one retested as well. So equities, because there's so many cross current in equities. Equities have a very strong propensity to come back to the zone, right? And anyone who gets in trades knows this type of pattern where you're long and then you get tortured, and then it finally goes. So this one wasn't too bad, but they did retest. So you can come up with rules where, you know, you see double whammies in equities, you wait for the retest. If you see them in any other product, you jump in right away. So once again, this one never really crossed the zone until here. But what I was looking at here, if it got across, you may have been filled if you put it right there, and then you may have been stopped out. So this is the danger of the ultra aggressive entry. But the official blue bubble above that zone was there, and then obviously it never came back there. And you catch this, you know, this is a 40, 45, 50 point move out of there. And that is it for the double whammy. Incredibly strong setup. High propensity for failure the other way. Oh, and what I don't have examples of, and I will add this. That's the great thing about this new course format. I'm gonna have like continue education. So as I see new setups, I can put them in the slides and in these. There'll probably be more in the PDF slides, your PowerPoint slides that you can go in and see, and I'll send out an alert when new things come in. But you know, these double whammies do fail sometimes, and that is a major heads up. Something bigger is going on in the market, right? So we just looked at. Not only do these things usually not retest, they're usually straight after the races. So if you see a double whammy and it fails, that's telling you something bigger is going on in these markets, and be ready for a much bigger down move. And you can play them the same way, right? As long as they don't get the ATR above, so you get your double whammy and then it moves below, you know, you can either get in aggressively or wait for the ATR retest, but very, very high odds that the thing moves exponentially down because it should have held, right? So like I said, there are broken double whammies, just like the broken ice. You know, the broken ice is, and this is a type of broken ice where you probably shouldn't wait for the retest. So the point is, you got to be careful though, because on this one, right, if you said, okay, it broke to the downside, I'm getting in here, you get stopped out of that one, right? So this is why I'm too old for this nonsense anymore. So I wait. So I would probably take this one aggressively, but I would wait for the ATR plus 10%, and I talk about that in another video, the ATR video. But again, you probably don't want to wait for retest if you get a broken double whammy is the point of that. And I will post more examples as they come about.